All right. Marcella, thank you for coming on. I wanted to talk about taxes, how to save money for families, realtors, investors. I know that you have events. It sucks that I missed a couple of them because I had a lot of questions. So now I'm going to ask you those questions and we can go over it.
Okay.
So tell me, how did you get into this? Not numbers is not for everybody. How did you get into tax planning and wanting to crunch numbers and save people money?
It's just something I always gravitated towards and I enjoy. And when it came to going to college, I had asked my dad, I like math. What should I do? And he suggested accounting. I went into accounting and I studied accounting. And
because he's an accountant.
Yes.
And he's been an accountant for a long time.
Yes.
Yeah.
And he actually never really pulled me into his business. He didn't say you should come work with me. He never put that pressure on me to work with him. But he did suggest accounting, and that's the area I went. And my very first semester, I had there was a lot of students that had dropped out the next semester because they thought they wanted to get into accounting, and then they said, no, okay, it's not for me. And then for myself, I enjoyed it, so I said, okay, I'll continue this, and I got my degree in accounting. I went back for my master's in business, and I wanted to go the private accounting route. So that's when you work for a company.
Gotcha.
And you're the accountant for the company. And so my plan was to be the controller and to move up the ladder that way. And plans changed, and I got married and started having
Always
kids.
Happens, kids, everything.
I got married, started having kids, and I left my full-time job. But I still wanted to work and bring in some money. And then that's when I started working with my dad, who has his tax business. At this point, he's had it for about 40 years now. And he started his tax business because it is a long time. And he always tells people, when they ask him, how long have you been doing this? He says, for as long as she has been around. But a lot of people don't realize that I'm going to be 40 years old.
Oh, wow.
Yes. And so, and I don't mind it. I don't mind talking about my age because I look so young. I feel age automatically usually comes along. Wisdom comes along with age.
Yeah.
And
because you don't want a business owner going, what's this kid going to tell me about my business? They don't know anything. That used to happen to me all the time. I hated it.
Yes, and you have to work a little harder to prove yourself and to earn their trust. And so I feel like the age helps with that part a little bit.
Yeah.
And okay, so then when we moved, my dad's a single dad, and that's how he started his accounting business. He left his full-time job at the post office, and we moved here to Fresno.
Wow.
About 24 years ago. And when we did that, that's when he got into real estate.
Yeah.
So he got into real estate. He's been in real estate for about 24 years. And he has continued his tax business. Excuse me. And so at that point, when I left my full-time job, I joined him, started working with him. I got my license just in case. He's also a broker. He's an independent broker.
Gotcha.
So he's on his own. I got my license just in case there was ever a deal that he needed help with to show a home, and started working with him with the taxes. And I enjoyed it because I'm helping him run the business.
Yeah.
And so that was fun. But then I kept having kids.
Yeah.
And my focus shifted more towards the kids. And
because you do homeschooling.
I do homeschool as well, yes.
Yeah.
So
you're running like a tax accountant homeschool for your kids.
Oh my goodness, yes. It just a lot, but it's really focused in the last couple of years. Now that my youngest is 2.5 years. 2.5 years old. And so now I can just leave the kids with their dad in the afternoon. So we switch. When he's off from work, I'll go into the office, or I'll take the kids to daycare for a few hours especially during the tax season, because that's when it gets really busy, and we need that time to attend to our clients. And they need a lot of attention.
Yes.
Oh, because they're still little. Yes.
Yeah.
8. Yeah. My oldest is 8. The next one is 6 years old, and then my 2.5-year-old.
Oh yeah.
Speaking of attention.
They're calling right now. Yeah. No, that's funny you say that. I think a lot of people I've talked to, because I work with a lot of entrepreneurs, and I'd say 50% of them say, when I had kids, I had to become an entrepreneur. I finally jumped into what I've always wanted to do, whether, work from home or just run their own little company. They got the kids running around at their office. But that seems to be like, that's always happens. Like, I couldn't do this anymore. So I had to, my husband was working here, my wife was doing this, and I was like, hey, I'm going to make this work. Give me 3 months. And then boom, you're at home with the kids, or like my kids are usually over in that office if I'm in here shooting videos.
Okay.
So I always have to bring, there's tons of snacks in there, and so
Oh, do you have little toys and stuff? That's what we have at the office.
That always
as well.
works out. Yeah. So what would you say your specialty is?
Our specialty, with having that real estate background, we do work with a lot of real estate agents in preparing their tax return, and also investors, and mostly long-term type of investors at the moment.
Okay.
Long-term, mid-term, and then looking more into the other areas of of the other types of real estate investors.
So what's the, like, because I know, oh my gosh, accountant, I mean, that's such a broad, it's like when somebody says, I'm a doctor, it's like, well, what kind of doctor? So when you say long-term, what kind of investments are those? Like long-term rentals? Are these people buying like
Long-term
small
rentals.
apartment buildings, or is it just everything
Long-term rentals, so people that you're familiar with the term long-term, short-term when it comes to like stocks. So same type of thing.
Got it.
Long-term is over a year, so you
Okay.
have your tenants for over a year. Those will usually be your long-term.
Got it. Got it. And then, so are they still doing flips and doing things like that, like where their income can fluctuate a lot throughout the year?
We don't have any of those types of clients yet.
Okay. Gotcha.
But growing into that area.
Okay.
And so it wasn't until a couple of years ago that I finally decided to take on my dad's business, because I wasn't sure if that's something that I wanted to do.
Yeah.
And
after 40 years, that's probably a lot of clients too. That's
yes,
a lot of...
there are a lot of clients, but most of our clients, we do have a lot of clients that are individual. They're individuals. We have a lot of small business owners, but a lot of individual type clients too. So that does take a lot of time, because there's it gets pretty busy. And because we came from the Bay Area, most of our clients are actually in the Bay Area. We travel during the tax season. We travel every weekend to the Bay Area.
Jeez.
And we still have a lot of clients that submit their information online, but because my dad's been working with them for so long, they like to come in person and see him as well. Or any new clients we recommend at the very least the first time. But there are clients we've never even seen.
Yeah. That's what I was going to say. So because like in my business, when in insurance, I mean, I'm licensed in like 10 different states. So a lot of everything now is DocuSign. Like 8 years ago, everything was wet signature and driver's. Now it's DocuSign. The company's like, cool. I've never even met half my clients. And so when you say, so you guys are meeting with them just because your dad's personable, he likes to show face, I don't know, bring gifts, whatever it might be. But when you say half the people you haven't met, is that pretty normal for, because I mean, tax stuff, documents and all that, like people can just email it to you or send it like just in the mail?
Yeah, we get some, very few. It's been ever since COVID, that changed a lot.
Yeah,
Before
DocuSign changed everything
Yes.
with the private signatures and the encrypted signatures, like
But
insurance
it's
companies.
using that technology is what changed a lot. So before that, that technology was there, but it wasn't being used because people were not familiar with it.
Yeah.
Right. So it wasn't until COVID happened that it pushed them into using the technology and being familiar with that kind of stuff. So for taxes, we use a platform for our clients. So that way,
Gotcha.
all of their documents are shared. The information is protected.
Yeah. I know a lot of people, especially during COVID, I was making phone calls right here on I had to buy like software and different platforms, and then people, it is weird giving your social security number over the phone or someone you've never met.
Oh, yeah.
So like I had to really update my website. I had to put more personable things on there. I started putting more on, I put my Facebook links, and I was like, hey, listen, I know this is weird. And I noticed that whenever you have everything out in the open, they call you the next day and they're ready to go. I can see your family. I saw that you got married. I see the things you like, and then you have your website. And I actually started turning a lot of like the fake Adobe photos. I started putting my family photos, photos we've taken during Christmas or whatever it was. So that really changed the game because COVID changed everything.
It did.
And a lot of people, I don't think, adapted and lost a lot of clients. And I was still just running ads, and they would get an email up front saying, hey, I'm in California, here's my license number, here's where to find so it made it a lot different. So I'm guessing it's the same way in taxes.
Yeah,
people who want to work with you but they live somewhere else in California, they're like, well, I'm going to send this person all my details, so you got to definitely be ready for that.
I feel like when it comes to their taxes, though, they're pretty comfortable with sharing their information, and it's very interesting because I'll get new clients, and then it's very it's funny because how personal it is, and I'm on the phone with them asking them those personal questions. Are you married?
Yeah.
Like it's asking
Are
them,
you a
like,
terrible spender? Like, just
are you married? Do you have kids? Do you have a house? And do you have a business?
Yeah.
But we need to know that information, and they're very comfortable with it because they
Yeah.
know that's just what comes with taxes. So
Yeah.
that part does make it a little easier that they know. The harder part is them asking for quotes. And it's difficult to provide a quote without being familiar with their full situation. Not to mention, a lot of the times they'll tell us things over the phone. That's one thing, but then when we're there in person or when they provide the documents, there's more than what they said because they weren't familiar. Yeah. But it's not even just forgetting; they're not familiar with certain documents and what they mean. For example, if they receive a 1099 NEC, so that's the if you have a small business or if you provided services, right?
Yeah.
And they don't understand that we need to file that as if you're a business owner. So that's a completely, that adds to your fee.
Yeah, all those little, well, for mine, in life insurance, it's very awkward at first because I have to ask you, have you had any DUIs, any felonies? And I put a lot of this stuff in my videos and websites, so when I talk to the person, they're ready now. Because the first couple over the phone during COVID were very weird. Because usually I come to your house or you come in here, it's just husband and wife, they leave the kids or there's no one around because I have to ask you, have you done any drugs in the last couple years? Because they might do a medical exam. Right. They might do this.
Yes.
Is there anything on your prescriptions that I need to know about? And sometimes like they don't want to tell you, but I'm like, I'm going to find out because the company is going to say, hey, what about this prescription? They forgot about what is it used for? And I got to text them, what was it used for? They might be a little embarrassed now that I know. But then you just have to act like it's not a big deal though. DUIs, felonies, bankruptcies, all that stuff is pretty like, oh my gosh, I didn't know all that went into it.
Right.
But for you, it's more like a doctor. Mine's more awkward. Yours is like they're expecting the questions like a doctor, When I ask them those questions, they're like, ooh, do I have to tell you that?
And they don't go through this all the time. Like they know that's what comes with taxes.
It's once a year,
but they don't really know what to expect when they're going to you for those types of things. Like, wait a minute, why do you need to know this? And then you need to go into the explanation and then, okay, I understand now.
I'm like, what was that medication for? And what was that? And some of the medications, they're like, I don't really want to tell you, But so what are the biggest mistakes investors and realtors and even just individuals make when it comes to taxes? Like what are like the top 3 to 5 biggest ones that you see all the time that people can be better prepared for?
I mean, I think to narrow it down, one of the biggest mistakes is just planning, but also understanding that when it comes to taxes, that's the end. There's not usually much you can change besides maybe contributing to an IRA. And so when they come to us to do their taxes and say they have a business or they have their rentals, a lot of the times they're not really even prepared with providing information that needs to be provided.
By the time
right, exactly. Yeah. But it's too late to make any changes, but also they come to us not prepared.
Yeah.
How much money did you make? Oh, okay, I made this much this month, monthly. Okay, then we need to calculate that.
Yeah.
And the expenses. Oh, I had this expense or I had that expense. Oh, yeah, this one too. And they did not track anything.
It's like, whoops. Oh my gosh,
yes. Yeah. And okay, so to narrow it down, because I was going to go into something else, but the main thing is the planning and tracking your expenses, having a system for yourself and understanding the different types of things. So you were mentioning accounting, the different areas of accounting. Even for a business, there's so many different areas because you have the taxes. That's an accounting part, right? When you prepare your taxes. But during the year, you need to keep track of your books. That's the bookkeeping part.
Yeah, throughout the whole year, not just in November.
Yes, that's the tracking your expenses. I mean, obviously, it would be recommended every time you have an expense. A lot of the times, it depends how active your business is.
Because every business is different. There's construction, farmers buy different things. Some businesses don't only buy things a couple times a month.
Yeah.
And then
exactly.
like a lot
not much activity.
Yeah, a lot of construction work or businesses I work with, they're constantly, I'm like, how do you keep track of all this stuff, And there's like, oh, they got notebooks everywhere. I'm like, you must be a nightmare to work with at the end of the year.
Hey, as long as it's organized chaos, because sometimes it can have things all over the place.
Yeah.
As long as they have it in an area.
Yeah.
And what were you were mentioning the different? Oh, okay. So it's not just the type of business too. It's also how big your business is, because even in each of those types of businesses, it's how active is your business. So if your business is not too active, you're not having that much activity, and so you can keep track of those expenses on your own. Once your business is starting to be a lot more active, then you can possibly look into different types of ways to track those the income and the expenses and everything else that comes with your business. And you can use obviously something like QuickBooks, Xero. There's different types of apps. You can just use Excel. Different areas you can hire a bookkeeping company. And what was the other thing? Oh, the main thing is separating your accounts. Very simple, right? We don't. I think we say that it's obvious, right? Yeah. You have a separate business account. You should because if you get audited, that's what they're going to look at. 2 years
ago, and it's been life changing.
You did that from the very beginning, right?
Yeah. Well, all my stuff is because I'm 1099, so everything was mixed up. And then once my account was like, actually it was my mom. She was like, you don't have a separate bank, and then so I had to change all of my companies I get paid from, log in, change all my bank accounts, but it's like, okay, it's totally separate now, which makes it so my account's not going through all my personal stuff and trying to find, and I'm highlighting.
It makes it easier. So even though that took some time, it does make it easier moving forward. Or future business owners start there, but that's not where people usually start. And because a lot of people don't know, they jump in, they want to get into it, and then they'll figure it out later. And so that just comes. That's why I say the biggest mistake is the planning. Try to plan ahead of time. What do you need to do to get started? As a business owner, if you're an investor, any type of investors, what do I need to do to get started? And the other thing that I want to tie into that is education, right? Because how are you going to know? Educate yourself. And all those different things.
And I've seen, and you do the education. Oh my gosh, what do you call it? Like the. What do you call those? Like the like when you do like Barrel House and stuff like
my
what do you call them? Like classes, events. I was gonna say, I was like, they're not classes, they're like events. Wow, total brain fart.
And I do like the education part of it because I feel that people should be aware. There's so many things to be aware of, and where are they going to get this information? I'm an in-person type of person, and I started holding events because I wanted to surround myself I wanted to learn more, right? So I wanted to surround myself with the people that are in those industries. And my concept for those types of events is to have investors and accountants to talk about the tax side of investing. So I wanted to bring those two worlds together, is what I always say. So I've had a few events, and I'm looking to have some ideas, looking to plan more, but it's just finding the time for those events. But I do have it on Meetup, and I have people always joining the group, but we'll see how the next event turns out. My last one, it was sponsored by, we had Zinc Financial come out.
And nice.
Todd, he was great in talking about the tax side of business and everything, and very knowledgeable, very, very knowledgeable individual. I'm looking forward to learning from him more in the future. Well,
I like going to things like that because I'm hoping someone will ask the question that I don't want to ask. And then I can learn from it. or I'm sure even for you, because I've thought about doing a couple of those, and I started things on Facebook, and then like 20 people joined, but then the first one I did, it said a lot more people were coming, and then maybe they just, I was like, okay, I don't know if that was worth it, maybe I did it wrong, I don't know. But so then I started doing Zooms, and I was like, okay, here's an event on Zoom, and I actually learned a lot just from the questions I was getting, and it made me think I need to put more videos out because they were so basic. But I was like, I've been doing this for so long, I forget about those really basic questions. And I was like, I think my stuff is too professional on Instagram. I need to go back to these types of questions and really break down in a really easy format, like my advisor always says. He goes, if you can't explain it to a 10-year-old and they don't understand, you don't know what you're talking about. You should be able to break this thing down in like kid format,
right?
So they understand. Because most people, like for financial advising or real estate, whatever it is, they're like, what form? What does that do? Or how do I do this? So I think events are great because now you get a feel of the room. Like, what are people asking? You know, maybe I'm getting too far out into the weeds and I need to help them here first. Like you said, just have a plan before anyone gets, well, should I have an LLC or an S Corp, or should I be this or incorporate? You're like, you don't even have a system. Like, you don't even know what you made this year. Like, you need to just have, what system are you using it? And then they're like, oh yeah, I'm getting a little too far ahead of myself.
and that's why I wanted to narrow it down to that. Try to make it as basic as possible, because that's where it starts. And then,
or else you're going to lose a lot of money at the end of the year if you don't have these
and you
systems.
don't, and a lot of people they don't really even know if they're losing money or not. They don't know what
until it's
to
too
base
late
it
and
off.
December 31st hits and you owe it in April.
Yes, yeah, and what could I have done differently? And so
Yeah.
from that point, that happens. So now moving forward, what are you going to do differently? And the other thing that I wanted to mention, that planning, keeping it basic. Oh, I've seen like the next years that follow. How are you? See how your business is doing year after year, and if there's a consistency and if it's growing, then you could start to look to make those big changes.
Like really
what you're talking
follow
about.
those numbers each year.
Yes, follow the numbers.
Like, write
know
it
what you're
down
looking
somewhere
at.
or on that file for 2019. Like like income versus debt versus what you spend. Just little things like that. Or is there other stuff?
I think the main thing is just seeing where you're at. So what you're talking about, I'm thinking income statements, balance sheets, and all of those
I'm getting
things.
ahead of myself because that's what I've done in the future.
But income statements. So looking back at those income statements and seeing what your trend is, and it depends what you're basing it off of. So that's part of your plan. If you're a fix and flip type of investor, if you're sticking to your plan year after year,
I see what you mean.
As my business is growing, as my income is growing, and my expenses, it changes tremendously.
Yeah.
So seeing how that goes, and then kind of going back, okay, is this system working for my income expenses? Also, always know what's happening, because a lot of the times what I mean by that is, say for example, your business starts to grow and your numbers, you don't even know what to look at or what to do anymore. You hire an accountant. It's still important to know what to look for, because you never know who you're hiring. Just on some, actually probably goes to know who you're hiring as an accountant. But there are people that
keep track a little bit on yourself. Don't just give it all to this person.
There are people that mess with the numbers and can take the money. So be very, very cautious of that. So no matter what, it's always really important. So I used to, because I got my master's, I had the opportunity to teach at Fresno State.
Oh, wow.
So I was a lecturer there.
Okay.
And that's what I always told my students, because I remember when I was a student and I took that class, it was accounting 4B. So it's one of those prerequisite classes that everyone has to take. So if you're studying finance or management, you have to take this accounting class. And people's mindset was, I'm not studying accounting. What do I care about this class?
Yeah.
They didn't really care about the class, but I always told the students it's really important to know what you're looking at, what the numbers mean, what to ask, what type of reporting to look at, and what to look for in that reporting. Whether you're a business owner, you run a department, you run a store, whatever it is, know what to look for.
Yeah. Oh my gosh, I know so many people that have called and say, hey, do you have an accountant, or who do you use? Because I've had some people go to some pretty fancy places and they go, I paid this much last year, and for some reason I ended up owing more, and we went over it, and I took it to someone else and had to pay them, and they were like, they filed you incorrectly, or they didn't put you were married, or they didn't put, or whatever it is, or or you should not be an S corp, you need to be and they're like, I've been going to this person for years and I've lost so much money, and then like they have to do like amendments, and they actually get a lot of money back like a year later. And I was like, what a nightmare that must be. Because my stuff's pretty simple, but like for construction companies, and they're like, I pay this much every year, and I pay this much every quarter, and apparently it's all been wrong the whole time.
Oh, man.
Or the person in the back, didn't get the memo from the person up front that, label it as this, or make sure it goes into the system as that, however that works. Yeah. So you gotta you got to be, I guess, double checking it yourself.
Yes.
Or emailing them and going, hey, you put this, right? Because
that part is hard, though, the taxes, because to understand it sounds like we're talking about entities and how the corporation is being taxed. So one of the things I had written down, because I wanted to like break it down,
the way
very
they coded
basic.
It was incorrectly, I guess. And
well, a lot has to do with how your business is taxed.
Yeah. So
at the state level, what are you, an LLC? Are you a corporation? And those are usually the biggest ones, right? And then how are you taxed? Are you taxed as a sole proprietor, like as a Schedule C, or a Schedule C as an S corp or a C corp? All of those different things, and all of those different things can completely change what you end up owing or what you may be getting back. But it's important that, as I think one of the best things that you could do as a business owner for homework and finding who you're trusting with your taxes is making sure that they understand your industry. Because every industry is going to be different. Everybody has their specialty. If a construction owner came to me and they're a developer and we're not familiar with that area, so we're not going to take it on because we're not familiar with that, and we're not going to do that person justice. And
because it's a completely different.
It's a completely different area, or a law firm. I don't know. It's just something completely different.
Totally
That's
different
not something that we do.
Totally
no,
different.
Exactly. Yeah, it's a different language. It's a
what
different vocabulary.
What you can write off, what you can't, just everything.
Yes, our area is real estate and investing, and
because even that I'm sure has tons of rules just in itself, like
yes,
real estate.
It does.
Yeah, depreciation and things you can and can't do, and you have to be careful with.
And I'm smiling and laughing because that kind of stuff makes me, I enjoy it. As I've been studying, I've been working with it, and I feel like when I'm learning those things and reviewing the concepts, I can grasp them a lot easier than I usually could. Because I don't know what it is exactly, but I wanted to go back to one of the things that you mentioned was they said they didn't know why. And one of the things that I learned from my dad was educating your client. You don't want your client to walk away not understanding what happened.
Yeah, because people will nod and go, "Oh yeah, yeah."
Right.
But if you like a child, if you go, "What does that mean?" They'll go, "I don't know. I'm just nodding my head."
Yeah. Well, I had a lady come in and she said that my dad was her favorite person that she hated to see because it was tax season.
I only want to see you once a year, and that's it. Yeah.
Yes. But educating your client, when people come and even if they have something as simple as a W-2, well, I'll let them know the fee, but also let them know that it comes with a consultation, because it's important that you're understanding how taxes work, even the very basics. And that's why one of the reasons too why I wanted to have those events. But I also in the future would like to hold some workshops and stuff just for the very basic stuff, because I think that taxes and understanding those things is really important.
No, yeah. Well, and I think if you educate your clients, they'll bring you the correct forms. They'll have it ready to go, maybe a little more organized.
That is where it starts.
Yeah, because and that's why I love sending out short little videos. Like when someone signs up to get a quote, the first thing they get is a short 1-minute video that explains how this actually works.
That's a good idea.
Because no website tells you, we're going to look at prescriptions from 10 years ago. They want to know if you've had this. They want to know if you've had that. You might have to do a medical exam. This could take 2 days or a month. So I basically explain that in 1 minute. So there's no like, well, I didn't know you were going to ask me that, or I didn't know I had to give you my social. In the video, it says, we have to know who you are. They're going to look up your doctor, your records. You have to give them access to your prescription. You have to have your date of birth, prescription. You're like, what do I need date of birth with social? I'm like, because there's 1,000 people with your name. And only you have your social.
Right.
So when you explain those things, it's a little less dramatic or like caught off guard for them.
They're so protective of their information.
And I get it too, because I don't nowadays, like, I'm not giving you my information over the phone. And so that's where I think the educating them also makes sure that they show up to you at your office on Monday and they have the correct forms, and they're not going to go, oh, I forgot that, or oh, I didn't bring that, or oh, I didn't know I needed that, then it's like, okay, well,
you needed this past 10 years.
Like just in case you forget, it's like, well, now I got to charge you for the hour or whatever it might be. But yeah, I think that's a big one. And then it also puts not like pressure on them, but gives them a little responsibility too. Like, hey, don't forget these forms. Don't forget to bring your whatever it is for, when you sold that, that apartment complex or whatever it is, because you don't want to miss anything either, because you're working with a lot of people.
Right.
And so, you don't want to end up like one of my friends where they're like, they didn't tell me, or they forgot to, or they didn't put me in the right bracket, and now I owe this money. And it's like, you gotta kind of tell them if things change though too. Like, did you switch through halfway through the year, or did you like some of my friends, their income can change quite a bit throughout the year, some of my clients. And I don't think people realize that every time you make more, you go into a different tax bracket. So they went from like 28% to like 37%.
Oh my goodness.
Halfway through the year, they had a good, good summer.
Right.
And they're like, wait a minute, from state and federal, they're like, they're going to take like half my money. I'm like, then you better keep your receipts and keep those write-offs, because you're going to owe a lot of money.
And are these business owners you're referring to? Okay. So
And
my thinking is make a payment.
or start paying halfway through the year. But if you can't prove that you also paid for material and you paid these subcontractors and you spent a lot of money on concrete or whatever, it's like you have to prove that you spent money too.
Yeah, keep track of everything.
Yeah.
Keep track those receipts, your mileage, and all of those different things. And I think one of the biggest things, the misconceptions, is your meals. So as a business owner, if you just go out to lunch, that's not a business expense.
Yeah.
Because
I used to think that. And they're like, did you talk about business during that meal? I'm like, no, it's just me. Yeah.
And I think a way to think about it is if you work for, I don't know, if you work for McDonald's and the business owner decides to go have dinner with their family and they use that as a business expense. You're like, wait a minute, that's not a business expense. You're kind of doing the same thing. You're not talking
business at that
You're
dinner.
You're doing the same thing as a business. You are the company. And so they don't see themselves like that. They just think they want to write everything off. And you got to see yourself as the company.
My
family
dog, my car, my clothes, everything's a write-off.
What I would highly recommend is if you want to write off your clothes, brand them. Oh. That would make a huge difference.
So my shirts that have my things. Oh wait, you know what? I don't know if I wrote those off actually, and I get new shirts every year, and I can't remember if I write them off or not. Oh wow, I need to double check that. Okay. Yeah, because I mean, the whole like the G-Wagons, everyone buys a G-Wagon or a car that's over 6,000 pounds because it's all write-off.
Right, yeah.
Yeah, there's like those little tiny loopholes in there, but I was talking to another accountant, and you can write off your dog. I think like his office is like in a sketchy area, so the dog like walks him to the office. And I was like, oh my gosh, that is. But he was like, he goes, you really have to prove that stuff though, because he goes, they'll start red flagging you. It all goes
back to
you don't want them auditing you.
Yes, documentation.
Yeah. And I was like, that is such a good idea. He's like, yeah. So if your dog, he's like, but you have to have like reason, like you carry a security box or you carry keys, and your office isn't in the best area, and you don't have gates, so you have your dog who might have so many hours of training or whatever it might be. And I was like, that's totally worth it to write my dog off. If he's just going to sit over here and protect me.
But at that point, I think it would be only the business use percentage. So you would need to.
Yeah. Yeah. Because even food's not like 100% write off, right?
Right. Yeah.
I had this number in my head for food because I meet with a lot of people and I'll buy their lunch and stuff. And even my accountant was like, you need to save those receipts, maybe put their name on it, because if you ever get audited, you need to prove like, did they become a client? Or she was like, because you're spending a lot of money on food.
Right.
And I was like, yeah, but that's like, oh my gosh, that's like $9,000-$10,000 at the end of the year write off. And she was like, no, it's only like 50%. I was like, 50%? She goes, well, if you're out of town, it's 100%. But if you're in town.
And then it's also limited to how much per meal. So
I just thought everything was a write-off, and I'm going to buy it. You can't just write everything off and think you're going to get away with it.
What I will tell you, though, is say, for example, if you do have an event and you do provide the food, that is 100%. So if you're making it, if it's for something like that, like a gathering, at that point it can be 100%. So it just depends.
Oh, okay.
It depends. Okay. A lot of the answers will always be, it depends.
I know. Every time I talk with the accountant, I'm like, so what's the? They're like, it depends. And I'm like, there is no straight answer. It just all depends. It's crazy.
Well, when you're talking about a hypothetical situation, it depends. So until you give me the hard numbers or the actual situation that happened, then we can.
Yeah. Same, yeah. I mean, yeah. Actually, same thing in insurance. Certain things qualify, certain things don't. And they say, well, what if I die from this, or what if I'm like? Depends. It depends on the company. Depends on how long you've had the policy. Accountants. Yeah. Like I'll have people ask me, and I'm like, better keep an eye on that guy. Like, so what about like suicide? If that happens, I'm like,
oh my goodness.
Well, I'm like, that's a kind of a weird question, but after 2 years, technically, it does pay out. I'm like, it depends.
Yeah.
And
that is a weird question. You get those questions?
I get that one
so scary.
A lot for some reason.
Oh, man.
And I'm like, it depends, I guess. It depends on how long you've had the policy and, the company and stuff like that. But with those ones, it's, there's no like, I guess even in my business, there's no straight answer. It all depends on your age and your health, and it's annoying. But what do you think? Because we were talking before, and I think it's funny that we're always taught growing up, you don't talk religion. you don't talk politics, and you don't talk money. And I've always thought those are like the only things you should be talking about with your kids.
Right.
Especially your kids and your family, and how much you spend and budget, and just, I mean, politics and all that. I mean, whatever. Religion, we talk about that a lot in our family. But money's like that big no. You don't ask how much people make. You don't ask how much, just who's your accountant, how much, you don't talk about those things. You don't talk about money.
I always want to talk. I'm always asking people. I feel bad, but I'm just like, well, at this level, what do you do here? What do you do there?
Yeah.
This is where my mind goes.
I know. And I have to be careful because I'm so used to asking people about their yearly income. Because it's one of the questions.
Right.
Like, you can't ask for a $5 million policy and make $50,000 a year. They're like, why do you need this? Or how are you going to afford this? So I'm so used to being like, oh yeah, how much do you make doing it? And I'm like, oh, I got to be careful. Like, that was kind of rude. But I have to ask you eventually.
Right.
But why do you think it's so important talking about money, taxes, planning, whether besides real estate, individuals, investors, but like down like to like families? Like how important, or how do you think they should talk about things like that? Even just a married couple, who might be an investor, or they have a job, but one of the spouses is an investor or realtor. And how do you think people should talk about that, or like really enhance the importance of that?
Well, I think it's really important because it would help with, getting into their adult years. We have to, I feel like because we don't talk about it enough, we have to then educate the adults because they're not familiar with it, because they haven't been exposed to it. As far as doing it as a family or teaching your children, I think the best way to do it is not necessarily having a lesson plan, but to make it part of your life. Yeah. So no matter what you do, always integrate it. Sometimes it'll come up, or I'll just talk to the kids about supply and demand and consumers and those things. And I use their toys as examples. Right. I would just get into the different things and reiterate it. But I feel like it's just part of my nature, educating the kids. I like to teach, and I like to learn, and I like to teach the information. I like to categorize things and organize things to make it to where they can grasp the information. But I think that's really hard. So it's easy my mind starts to go many different ways. It's easy to say, do this, and that, but also, how are you going to go about it? Yeah. And you also educate yourself. I would say maybe first, educate yourself. How are you going to go about it? Know that you're talking with children that may not fully grasp it, and be patient, but just make it into your everyday type of life, and how you're going to teach them about it. Have them be more involved, take them to the bank, have them pay for things, or say, if this costs $15 and they give you $20, how much change should you get back? Little things like that. And it just grows, and they start to think about those things, because once they start to think about those things, they start to familiarize themselves with the concept of money.
I'm really teaching my kids right now to dislike taxes.
No, don't do that.
So
taxes
they will.
Is good. No,
it
not
is
good
to a certain extent. So now my oldest, my son, is questioning, and I was so proud. I had like such a proud moment, and because he bought something at the store and he got his $10, and he has that for the week, so he has to make it last. And so we'll go places, and I'll go, well, how about you buy that? And he'll go, no, I bought that last time. That's too expensive. And I go, well, what should you do? He's like, well, I'm going to just buy it in bulk. So he'll wait till we go to Costco to buy gum. Because one thing at 7-Eleven, and he's starting to learn the concept of money.
That's a great example.
We'll go over taxes, and I'll show him the receipt where it says this tax and that tax. Nice. And then I do this other thing too, like anytime I open something for them, a drink, or they want an ice cream or whatever it is, I take a bite of it. And they go, tax. and everyone thinks it's hilarious. And I go, why? And they go, because that's what you do. You just tax everything. I go, because everything's taxed though, right? So they're starting to question, why do I have to give you that? And finally, my oldest was like, but why do you have to, like, why though, Dad? And I was like, finally, I've been waiting for you to ask me why.
Right. Oh, okay.
So you open the package, and then you take a bite of my ice cream. Now I only have this much left. It was mine. And I go, because I bought it, and you live under my roof, and I protect you, and this. So he wants reasons now.
Nice.
And he gets frustrated, like, why do you get that's half my ice cream right there, gone. And I go, you'll figure that out when you get older. and you'll keep asking these questions. Why?
Right.
And then so we talk about this tax and that tax, and I went over all the taxes with him one day, and he just looked at me like, so if you already paid for, then why do you tax it again? I was like, exactly.
Yeah.
I go, nobody knows. We don't know why certain things are taxed 3, 4, 5 times, and then we still pay tax on it. I go, don't know. It's just the way
at this point,
it's just the way it's set up.
Acceptance.
Yeah.
Especially in California.
Yeah. And I'm just like, I'm creating a different voter right now. He's going to get older and go, I don't know if I want to vote for that person.
Yes.
Because I don't like what he has to do with taxes.
Or for certain bills and things that'll increase taxes. So it's be more aware of those things. That goes into politics.
That goes right into politics.
And, and politics can be a controversial thing, but it's important to understand it.
Yeah.
I think because it's considered as a controversial thing and we don't talk about it, it's harder to grasp those concepts. And so now I'm kind of going back into it and learning. It reminds me of, what was that, the bill, how it what was the magic school bus, or remember the rock, what is that called?
I know you're talking about the old school 80s.
I feel like I still didn't even understand it then because I needed someone to explain it to me.
I know which one you're talking about. The little cartoon. There was like a little song and it talked. I know you're talking about.
And it talks about his journey into becoming a law.
Yeah.
and those different things. So that goes back to.
But I can't remember.
But you can see it. You don't fully understand it because it takes talking about it at home and educating your kids. Just teaching. There's, and the education part. Yes, there's school, but it's important to have that at home too, because that's what solidifies it, and also solidifies what you want your kids to know and remember, and what you think will be most important for their life.
Yeah. Well, because I listen like Andrew Huberman a lot and all these scientists, and they always say like kids between, I think it was like, I can't remember, like 4 and 9, that's when they suck up the most, and those years can even like whatever they're into at those ages, they might end up doing later after college, or they'll be like, why do I love this so much? And it's like, well, at this age you did this a lot, and then sometimes they go a different path, but they're like, but you'd be surprised how much they are just taking in right now between like 4 and like 9 or 10 years old. So I keep instilling money, and we do talk a little bit about politics, especially in California. Like they'll hear me reading an article and me and my wife getting loud, and they'll be like, what's wrong? I'll be like, they lost another 130 billion, and they're like, well, where'd the money go? And I'm like, I don't know. And they're like, well, do you get it back?
That's why I'm mad.
Yeah. And they're like, well, like, do you get the money back? And I'm like, no, it's gone. And they're like, but why? And so like now they're concerned, but I think it's good at this age to, like, even my youngest, like, he knows how much a normal bike costs now. And we were looking at, we were at another store, like a fancy bike store, and he went, Dad, these bikes are way too expensive. They were just kid bikes. And he was like, these are like 3 times more than the ones at the other shop. And I go, well, that's because it's that brand. He goes, no, it's that brand. Oh. And I go, that same one? And I go, that's called market value, bub. And he was like, what's market value? I was like, you are learning a lesson right now of paying too much. And why does it cost more here but not more there? It's the same tire, same frame, but it has a name brand on it. And then when we buy things, I'll show him, he'll go, oh, that's what it was. One of the things we bought him, his electric bike, it was like $900. But then when I showed him the price, it was like $1,011.
Oh,
and he goes, Dad,
right.
that's not right. That's not what it is. And I go, that's the California tax. And he goes, and his brain was just like, what? And I go, there's another tax on top of buying that that we have to pay. And he was like, where's that money go? I was like, honestly, I don't know. And so he's starting to ask questions that even
track of.
But I like that he's questioning everything now. You know, and my little one, my daughter, every time I tax her juice, she's just getting mad. Like, well, why do you do that? And
I'm like, get to do it all over again.
Yeah. I'm like, I need that instilled in you forever, because this is going to change your life, understanding money and just asking why instead of just going through the motions every day.
Yeah. And that's perfect. That's exactly what I was referring to, is just bringing it into the everyday life, wherever it fits, wherever it makes sense. You turn every opportunity into a little lesson plan. That way I feel like they grasp it better versus something that's on paper and you give them a hypothetical situation and then you expect them to remember that versus the real life type stuff. And that reminds me of some of the things that I teach my boys, is that it's not about having all the money in the world to be able to buy whatever we want or to go wherever we want. It's where do we want to spend our money? Because then it's like, oh, we're not rich or something. Even if we were rich, you shouldn't just be spending your money on everything.
Yeah, you're making someone else rich.
Yes, I haven't mentioned that. I should say that. But it's, what do we want to spend our money on? You have this much, you have a certain amount of money. Do you want to spend it on this or do you want to spend it on that? And then so that's what kind of gets his head turning, the wheels turning in his head, and gets him to think, okay, we don't want to just throw money away. So it's not about what money we don't have, but what do we do with the money we do have?
Or like I remember growing up and always hearing my parents say, because they've been entrepreneurs forever. I think like they worked for other people when they were younger, but then they've just always had their own businesses. And I always remember my parents saying, it's not how much money you make, it's what you keep. And I never really understood that.
Because you assume it's the same thing.
Yeah. and I never really understood that. And I don't think anyone cares about politics or anything until you owe taxes. And you're like, wait a minute, why'd you just take my money? I thought I was getting money back. And they're like, nope, because you don't have kids or you don't have this. So you actually owe us $800. And I remember being like 19 or 20 years old and like, it was like the first time I owed. And I was like, wait, I don't understand. And then you start getting more curious, just like a child, and you're like, okay, who set that law in place and how do we vote them out? Because I don't like these laws.
Or when does it expire?
Yeah, like so is that like forever? Like where did my money go? Because like the roads still suck, or this isn't great, my library doesn't look good, like so I think, but because I grew up with parents that always own their own business, I always asked different questions than my friends did. And then when you drive around, you notice things like, why isn't that nicer? Why hasn't the YMCA been rebuilt? Or why I thought we pay money here, like to live in a nicer neighborhood, you pay higher property tax. And so if you start training your kids now, especially if you're homeschooling them, like they have full advantage with a mom that understands money, and they're just going to be questioning like, well, how can I get rid of this money legally and not owe it? Because that's
or decrease my taxable income.
How can I decrease my taxable income? Because I mean, it's my money. Like I want to keep it. Like you brought up an IRA earlier. So many people do not take advantage. If you just owe a couple thousand, put it into an IRA account. Pick it up later. Yeah, you can't touch it now, and like, oh, it's gonna get taxed. I'm like, but if you double or triple that money over 30 years, it's still yours, even if it gets taxed later.
Yes.
So like,
where do you want the money to go? Where do you want the money to go to?
Or besides IRAs, are there other things that are just like low-hanging fruit that people just do not take advantage of or like set up correctly? Or is like the IRA like one of the big ones that you guys use where you say, hey, you're gonna owe this, just put it into this account?
I think for individuals, that would be the biggest one. But as far as the taxes, so that can go into entity structures. Depending on when your business starts growing, you might want to look at the different type, how your income is taxed. If you want to look into S corps or C corps, and obviously those situations depend on
so we're not going to get into what those are.
Because it's taxed differently. So when you're a business owner and you are filing your taxes as a Schedule C, you're having to pay the self-employment tax. So it's about 15% because you're paying both sides, as the employer and as the employee. And so that's a lot of tax. Versus if you have an S corp, then it's a pass-through entity. Then you get
like runs through like your own bank, right?
It runs through your own
runs
through your own personal taxes.
Yeah.
So your income gets taxed differently. So it just depends on the situation and what we're looking at.
Yeah, and then LLCs, and if you need different protection for your business, it just depends on what you're doing and your employees. I'm guessing just everything.
Employees and if it's just yourself, if you have a partner, and different things.
Yeah.
Like that. When you're looking into the structure of your business.
Yeah. Because I was actually looking into having a couple employees or like kind of like assistants for different things, but then I learned, well, you can just like 1099 them or contract them out, and I was like, oh, that sounds a lot easier because I don't want, because I'm still independent, I'm still 1099, and I'll just 1099 them, and basically all you're doing at the end of the year is just saying, I gave the money to them,
right?
So it reduces.
You provide their
like I gave them a lot of money to do my website or whatever it is, and you got to save those receipts, or else you're paying double really at the end of the year if you don't do that correctly.
Especially for services like that, it's not an office assistant. If it's for services for.
So I don't want to pay Medicare. I don't want to pay all the other payroll, and because there's a payroll tax too, right? You got to pay. I was like, I'll just do like the 1099 or hire some guys off Fiverr, and have me and send me their information at the end of the year when the job's done.
Yeah, and because you mentioned website. For a website, it's usually just a one-time thing, and then any updates, you can possibly do the updates, or if you need to do a complete rebrand or revamp of the website, then you hire them again at that point.
Yeah.
Versus having somebody on ongoing.
Yeah. Yeah. And then back real quick to planning and preparation. I finally learned a couple years ago that you don't wait until December 31st to say, hey, what am I going to owe? Because now you can't write anything off or anything that you might have forgot to do. So one of the little things that I started doing, just as like a little side story, I finally learned years ago, because I would wait till December, talk to my accountant or, okay, this looks like what I'm going to owe. But then I switched accountants, and then I learned they were like, no, we talk in October. We don't talk in November. We don't talk in December. We talk in October. We look at everything, we look at numbers, how much you think you're going to make in the last couple months of the year. And from there, this is what tax bracket you're going to be in. What write-offs do you, and then I go through, well, I probably have this much in write-offs. I pay this much in advertising, and I paid this. And, I kind of go, because like I said, I have a separate bank for all that now. So I can look in that bank and go, this is everything that's negative. Everything subtracted that I've paid. And when you do that, it really helps to not owe in April. Because I just thought, you know what you made and you pay what you owe in April, or you get money back. And then the more I started to owe, though, I was like, okay, there's got to be a better way to do this. So for entrepreneurs, and I always tell my clients too, like, I'm not an accountant, but I always tell people, you're getting with your accountant in like October, November, right? And they're like, for what? And I go, to know what you're going to owe.
Right.
Because if
Be prepared.
Yeah, because if you think you're going to owe, I'm just used to paying, I'm going to owe like 10, 12 grand like I usually do.
Goodness.
It's like, wait, what? You owe how much? And you're like, yeah, I just, because they make good money. And they're making a couple $100,000. They go, yeah, I usually owe 10, 12 or whatever, 15, whatever it might be. And I go, there's nothing else you could be buying. You can't put some money into advertising or go buy another vehicle, or maybe it's time to get into real estate and start investing in that. So are there any other mistakes that you see people making towards the end of the year, or not being prepared for, like in the middle of the year, that they should be doing? Besides that, like you said, besides like not tracking their miles, or
right,
or maybe like have like an app where you can scan receipts or whatever it might be. Is there anything else realtors should be taking advantage of that they might not be doing, or even investors that want to get into real estate? Because I know, when you make a certain amount of money, everyone says get in real estate. That's like the biggest thing. Okay, time to get into real estate. Is there anything besides that you think people are not taking advantage of, or maybe dropping the ball a little bit? Like when you talk to them in January and you went and you go, oh, you probably should have done this. We should have talked earlier or made a better plan.
Well, it depends.
Oh, yeah. Of course.
It depends, because when they're looking at their finances, because you're gonna owe if you have so much money, right? But if it was a certain type of year where you had so much more expenses and then you don't even have that much income, then you're not really gonna pay. But if you're having somebody that's constantly paying, I would recommend that they make their payments, so that way, and
reevaluate.
Make their payments that they need to make during the year, so that way it's not too much during tax season. But everybody's, what their preference is usually going to be different. And the other thing about, is there anything else they could do? I would say, man, that's just a difficult question, because every person's finances are different. But also, this is part of the planning. If you're looking to buy a house or to buy something, you need to report that income. So you don't always want to offset your income too much, because you want to show that there's been an income. And so there's different things like that to look at, because people are always so focused on that, and then they're looking to buy a house, and where lenders are going to be looking at their tax return. What's their income like, the income to debt ratio kind of numbers. And that's something to consider.
Or also, like spreading yourself too thin with loans, or just things like that, like for growing your business, or just timing. timing and all that.
Timing. And it's like when I used to tell some people that they would have a side business, and unfortunately not everybody always reports their income. And I would recommend report it because you want to have that history. If you're looking to buy a house and you needed that extra income, you want to say, oh, I do this on the side, I'm a personal trainer, or I do something, and you don't have that income to show for it, and they need 2 to 3 years of your Schedule C type income. And so I would recommend to start that, even if it's a little, even if you have to owe a little more, it'll help you. And especially now with how the prices are and people getting loans, it's been more difficult. And trying to qualify, because you need so much more income. And the other thing that I was going to say is let me see. So we're talking about the income and expenses. It depends on your business. So it depends if you need a laptop, buy your laptop. So it depends what type of business you have and what you need for your business, because you also don't want to just buy things if you don't need them.
It has to be for the business.
Yes.
Like, what's the word? What's that called? Like
ordinary and necessary.
Yes,
it needs to be ordinary and necessary for your business.
Necessary is the big one.
Yes. Well, and ordinary it goes towards like, what are you going about your business? Is this something that you're usually going to need? So the ordinary business is something to default on when we're looking at when you spend money. Anytime you're spending money, is this ordinary and necessary for my business?
And don't buy it if you don't need it.
But if you need that laptop, get that laptop that you need, or any type of because I'm thinking real estate agents. What do they usually need? Maybe they'll need some signs or some business cards, but there aren't usually too many big expenses that they'll need to take on.
Well, and that's what I started doing a couple years ago. Well, every year now I it's not perfect, but I know if I'm gonna owe, and it's usually not that much because I offset everything pretty well throughout the year, I've learned. And so like if I know I had like a couple big cases at the end of the year, and now I'm like, I might owe now because those were some pretty nice cases. And it might put me in a little bit of a different tax bracket, but like we're not 100% sure. Just in case, I will spend $4,000 or $5,000 on running ads, or because you can set them up on Facebook certain ways, or if I need certain things done, or I do need a laptop, like I'll figure out what I need, because I'll start buying things now in November or December, or I'll start buying a lot of my clients' gifts. And I'll start, or whatever it is. I'm like, I got to get rid of this money.
Their gifts are limited.
Yeah, because those are limited. But I was like, I'm going to owe this money anyway. I might as well do something else with it. Or go get more T-shirts made, or go get better
promotional
folders.
Type items.
Yeah, promotional things, or like I've learned
ad spaces.
Yeah. And so all those things, put down a big chunk of money on Facebook ads, or Google ads, or go buy a camera and start doing YouTube and run your own ads, whatever it might be. Because I always tell people,
pay someone to do that.
Pay someone ahead of time to do that, because I always tell people, like, you're gonna owe that money, or you still might owe a little bit, but at least you got rid of a big chunk of it back into your business, so it kickstarts you for January, February, March. Like you're kickstarted first in the beginning of the year, and you're running ads, or you got shirts, or you're putting up signs. Like, go spend that money. Especially if you're like, I usually owe $5,000-6,000 a year. I'm like, go spend that money. You still might owe a little bit, but at least you kickstarted your new year. Putting it into your business. So but so many people just don't, end of the year, you're tired, you're like, all right, time to go.
You've been so busy thinking about your business and making those deals, and then not really realizing.
It is what it is. It's like
that's dude, easier than just making that effort.
It's like, get creative. There's something you can buy for your business, or I don't know, whatever it might be.
And that's having that. You said that you get with your accountant ahead of time, so that's amazing. I don't usually have people. We try to reach out to people, but they don't usually come. And
when you're tired of owing, you'll reach out and go, hey, can we kind of look at what I'm owing?
Actually, going back to, you said that that's how you feel because of your upbringing that's brought you to ask those types of questions. And so a lot of people, they don't think of that.
Me and my dad are sitting in the backyard, and hey, what do you look like you're gonna owe this year? Oh, this, or when some people are like, you're not supposed to talk about that, but we talk about money all the time. We talk about money and politics. We talk about all that stuff. And I don't know. I don't know who made that rule up, but it's always been kind of weird to me. You don't talk about that stuff.
When I heard that rule, I would usually hear it in school, or something, and it's, you don't bring, or at work, obviously, school and work, and but I guess it was
from your teacher who's never ran a business. It's like, no, this is what we should be talking about, you know? Yeah. But I've always thought there should be more because I mean, homeschooling
it should be more of a norm that you speak about that with our family, especially.
Yeah, because that's one thing. Homeschooling is completely different now than it used to be when I was young. Like when I was younger, the homeschool kids were kind of weird, and everyone was like, they were socially. Everyone wants to homeschool their kids now, though, and the homeschool kids are like, they're usually like kind of like they're smarter, they're wittier, like they're more like a little adult. You know, I'm like, oh, you're like a normal, like you're like a little adult already. You know, like homeschooling's totally different. And there's like these groups that get together, like these huge mom groups. And I see like these kids like going to the lake and doing their homework. I'm like, okay, that's pretty cool. Like if I had the time, I was like, I might homeschool my kids because that's actually pretty cool. They're getting like the best of both worlds. Yeah. And
I get to experience life with them.
Yeah. So your kids, I'm guessing, as they grow up, they're gonna start.
Oh yeah, of course.
Doing some little accounting. They're gonna start doing some little accounting.
I'm hoping.
Yeah. Yeah. They're gonna be quizzing them on taxes and what tax. If I give you this much money, what tax bracket are you in, and what are you gonna owe? And they're like, well, why are you taking my money?
Do my taxes at 10 years old.
Yeah. So, last question real quick. So, what should people look for in an accountant? Because like I was saying, I have so many friends that are always like, this person's been screwing me for years. I'm getting all this money back, or I owe money because they did it all wrong. Or like, what should people look for when they are looking for a new accountant for the new year or halfway through the year or whatever it might be?
Right. Or last minute,
because somebody just completely screwed all their stuff up and they're frustrated and they're like, I need a new person because this isn't working.
Well, I mean, we're right here.
Yeah, exactly.
No, when you need to make sure that your accountant, tax accountant specifically, if we're talking about taxes, you want your tax accountant to be familiar with your industry and your type of work and your line of work. And just ask some questions. What my dad does is he'll set that appointment up. He'll work with you. He'll basically prepare your taxes. And if you're not happy, then you will not be charged. You will not move forward because he doesn't want a client to feel that they're not happy with their experience or with their overall experience, right? If they owe and why do they owe and everything that comes with preparing your taxes. Yeah. So you want to make sure that you find someone you trust. And I think the best way to find someone you trust is word of mouth. Yeah. We have a lot of clients that are word of mouth. We get so many new clients every year. And my dad's so funny because sometimes some clients will not come back with us, but he says they'll come back. Yeah. And in the beginning, I used to think, okay, yeah, sure, Dad, you're so confident. They got their license, and they're like, oh, this isn't working. They really do. They're like, okay, wait a minute, okay, Ray. And my dad would be like, all right, come on over. Yeah, it's like when you try a new hairstylist or a barber because your friend's license out, you're like, I'll come back in a couple years, like when you're a little better. Yes, and so I had a family member that did that, and I told him, just send me your taxes anyway. Let me make sure that it was prepared. Yeah, prepared right. I want to make sure that you were taken care of. Yeah, because if you check one wrong box, it makes everything different. And really I've done that a couple times. Or I forgot to update that I'm married now, or we had another kid. And you're like, oh, another kid. And make sure that the don't forget to update. When it says, has anything changed in the last year? You have to look at all those boxes. Changes. Yeah. Those are big. I was like, I got money back this year? I was like, whoa. Yeah. Have more kids. Yeah, that's what people need to have a kid now. Yeah. I was like, that is kind of weird. Like the government wants you to have more babies and build houses and build companies or, build a building downtown so people can work there. And, it is kind of weird, like the things that they incentivize. It's always, real estate's a big one. Kids and real estate's a big one. It is. And what I would highly recommend is, I want to recommend a book. So Tax-Free Wealth by Tom Wheelwright. I recommend that one because I feel like that book was written for everyday individuals to understand taxes. And for example, family vacations. How obviously family vacations are not a write-off, but how could you make it a write-off? If there's a conference that is for work, how could you use that? Yeah. As a family vacation. Isn't it like as long as 50% of the vacation is the concept
talked about business, or there's like little rules, right?
The concept is a sandwich. Start with business, In between could be family, and then end with business. But highly recommend the book because I feel like that breaks it down really well. And Tom Wheelwright is
that the Robert Kiyosaki's?
Robert
I knew
Kiyosaki's
it.
accountant.
That's right. Yeah, the blonde guy, I think, right? Robert Kiyosaki's guy. Yeah, because Robert Kiyosaki hates taxes.
Yes.
He's always talking about real estate and taxes and debt and all. Yeah.
And Robert Kiyosaki is why Tom Wheelwright wrote the book because the way he came about Tom Wheelwright was by asking him those questions to make sure that he is with the right accountant. And after working with him for so long, he's like, you need to write a book. Yeah. And so that's the book that he wrote.
Because maybe he found a special niche, or something where people were asking him, well, how do I write off vacations? And he probably just went down that rabbit hole of codes and what you can and can't do.
And he talks about how the tax code, most of the tax code is written for how do you avoid spending so much on taxes or those kinds of things. So like it's a really neat breakdown.
I've heard him say that. I think I heard him say that. He was like, you'd be surprised. It's not all out to get you. If you use it correctly, it's actually a lot of write-offs, and a lot of it is actually more. It favors business owners. It doesn't. It doesn't favor it favors 1099s.
Well, if you get into the quadrant.
The 4 quadrants.
Yeah, it's by Robert Kiyosaki. That will explain it more too.
Yeah. He was like, well, doctors aren't that smart because entrepreneurs are seeing. And I was like, that's a really good point because you're more like, I'll work with this guy. I'll have this guy do that. And you got to get creative. And that quadrant's a really good one. I'll have to put that somewhere in the notes. But that and the Monopoly game, you'll never look at anything the same.
Right.
When he really broke down Monopoly and taxes, and I was like, whoever invented the Monopoly game was trying to like warn you, if you make too much money, go buy real estate. Just keep buying buildings all the way through.
I know. I haven't played Monopoly since, but that's probably something that I'll need to play with my kids.
Yeah. I can't remember. I haven't played in a long time either, but I remember them explaining the game, and they're like, how do you do this? Oh, you buy real estate. Oh, how do you skip ahead? Like, oh, you buy real estate. You just keep buying buildings. And I was like, it's literally because anytime somebody makes a certain amount of money, they always say, I had to get into real estate. I needed the write-offs. I owed way too much every year. So that's, that one's interesting. But actually, one more question.
Uh-oh.
Why is real estate so important for people that are looking for the tax deductions? Like, why is real estate like just the king of, like everyone goes to real estate, it seems like, you talk to people and they're like, oh, got into real estate. Because basically tax deductions.
Well, I think the biggest tax deductions with real estate you have, I think that's when you can actually use your Schedule A. What that would be for, that's personal. Okay, we're talking about real estate for personal real estate, like owning your own home. Because if you own your own home, you get to write off the mortgage interest, the real estate taxes. But as far as having it as investments.
As an investment.
The biggest, I think real estate is more of a long-term type of thing because every single year when it comes to like the deductions, you could only, it depends how you, it depends
the D word.
What type of investment because it's in your participation in the real estate. So if your participation is, if you're materially participating, that's when it can move from, your income can move from passive to non-passive. And you want your income to be non-passive or your expenses to be non-passive to write off your regular income like W-2s and that kind of stuff. Yeah. So that's when it gets into those types of things because
so it's like a little checkers game with the IRS on what you can and can't do.
And that's when people get into the you have your bonus depreciation, your real estate professional status, and all of those different things. And that's why people get into the short-term rentals because that's what puts you in the non-passive category.
Yeah.
And that's what was the other thing? Fix and flips can be on the non-passive too because that's active. You're actively working in that versus having your long-term rentals. That's going to be your passive type of income. So.
And is it just because like you're deducting like materials and like if you're doing like if you're flipping, is that where like a lot of the tax deductions come for somebody is like, or what else besides like material, like what actually is being deducted there?
So let me see, deducted without getting
Sorry,
trying
is
to
that
be
too much? I know it all depends.
It's a lot. That's a whole other conversation. But your Schedule E and your passive income, you're limited to your losses.
Okay.
Versus having a non-passive type of business, and where you're not going to be limited. It can completely directly write off your W-2 type income.
Gotcha.
Because
Okay.
that was a huge change. Back in it was a Tax Reform Act
Yeah,
in
because
1986.
as a W-2 employee, you can't write anything off.
Right.
You're an employee,
Yes,
but so
yes.
real estate's like that little loophole
Yes.
where you can't. Okay,
Depending
that makes
what
sense.
type of real estate and how you use it.
Gotcha. Okay, that makes more
A lot,
sense.
yeah, well, like a big picture kind of thing. People will get into the fix and flip and do the short-term rentals, right? Then because that's a lot of work there, they'll build that up to then do the long-term.
Yeah, because some
rentals.
W-2 employees make a lot of money,
Yes.
and they're like, my 401k's tapped.
Yes.
I've done the IRA, and I still owe this much because I moved myself up the ladder. So then the next thing is either starting a business, which some people don't want to do, or
Right.
real estate because
and
it
if they
makes
get
a
into
little more
short-term
sense.
rentals, that can help.
Gotcha.
Those expenses.
Okay,
come with
I've
that.
actually never had it explained that way. That makes more sense because W-2 employees, you're tapped out. There's nothing you can. It's not like a 1099. Like I can think of a lot of stuff to deduct and write off and buy that I need, but
Right.
W-2, you go to work, you go home, and you're like, I'm gonna owe a lot of money again this year. I gotta figure something out.
Have kids.
Yeah, yeah. Have kids,
There's
buy
only
real
so
estate.
many kids you can have, though. No,
Yeah.
I understand.
Yeah. Cool. Well, I think that is it. We'll have to do this again because I know. What's the best time of the year to talk? Like, when do you do your events? Like, when should people really start preparing? And like I talked to my accountant like October, November. Like, is there a certain part of the year where people really come to you and start asking questions, or is it just kind of like depends because everyone's different all through the year?
It's kind of out throughout the year. If they're looking to get a distribution from their retirement account, what should I do? How much should what does my tax bracket look like? How much should I have them tax? And those kinds of things. So those are usually the types of questions we get during the year.
Okay.
As far as planning, we don't get too many planners.
Yeah.
And that's
Just
why.
money wasted. A lot of money wasted. Yeah, because
Yes.
I was just, it wasn't like a lot, but I was like, there has to be something else I could be doing with this money. Topping off the IRA, because I don't have a 401k or, different things like that. But it was just little money here and there that was kind of making me mad, where I was like, I should have been doing something with that all these years.
Right.
And when I added it up over all those years, it was like 25, 30 grand that I could have just been doing something with. Something, instead of just, I'm just used to paying the bill. It's fine. It's what I owe. But it's like, well, if you look at the code, there's things you can do. They want you to write things off and keep the
Yes.
economy going and buying things and
Yeah.
supporting other businesses. So, yeah.
And you know what? And a couple of things. So, as far as when should they contact their accountant, it depends on what they're looking at. Keep track of your finances during the year. If you are very busy and if you have a very active business, have a bookkeeper.
Yeah.
And make sure to get your reports from your bookkeeper. To make sure to get your income statements and your balance sheets. We worked with a company. She
Yeah.
didn't have any of her financials. How do you not know what your history looks like? Well, she has an overall idea of what her income was for the year, gross, but not necessarily what month over month type thing. So be familiar with that.
So you always kind of have like a number in your head, and you're kind of keeping track of it in your head a little bit. You know where you're at, and just always getting a report.
Yeah, have a report. That way you have something to look at and to look back on.
Yeah.
And see what your trends are, and you can see how much did I spend this month. Why is this number higher this month than the previous month? Or those kinds of things.
Or this April versus last April looks totally different.
Yes.
Why is that? Okay.
Yeah, and then you can write your notes. And the other thing is, one of the things in the Tom Wheelwright book, The Tax-Free Wealth, that really helps you to see things differently as far as your everyday type of expenses. How do you keep yourself in the mindset where you're not paying, where you can use it as an expense and not paying so much at the end of the year?
Yeah. Yeah. Legally, we're not
Yes, of course. Everything is legally.
Awesome. Well, Marcella, thanks for coming on. I appreciate it. I'm sure we're going to get a bunch of questions and comments on Instagram and YouTube, so we might have to do this again in a couple of months. But where can people get a hold of you so I can put it down in the description? Social media, websites?
Yeah, social media, Marcella Zalpa, our Instagram handle, but also our tax business, RZ Income Tax on Instagram, and Realty Z Group for our real estate business.
Perfect. All right. Well, I will put those in the links. Make sure you guys go check out Marcella. Message her if you guys have any questions, because it all depends at the end of the day, and everyone's going to be different. And thanks for coming on. I appreciate it.
Thank you. Thank you for having me.